We've had the project underway for about the last 2 years now, and it's made significant progress in terms of the definition of the resource. Now we have a bankable reserve. We've actually lodged our mining rights application in February, and we have a target to try and raise the funding necessary to do the major construction of the mine sometime next year, subject to receiving the mining rights application hopefully early next calendar year.
And you say that your initial mine investment is R4.5 billion. How much are you hoping to raise from this particular exercise?
Well, the funding exercise is pretty much going to be a debt and equity type process, and that gives rise to the need for us doing the dual listing in a way, because what we found is that the South African banks would like to participate in the project, as they should. So we're looking at a project financing which would see a sort of a debt to equity mix of about 60 to 40% mix, so 60% by way of project finance, 40% by way of equity raising. By listing on the JSE, it enables the South African banks to help to participate in the syndicate that would be formed for the project financing, you see.
Now, what kind of interest have you actually received from this in terms of your book building?
Well, I guess quite a surprising amount of interest. I think the fact that we're obviously a foreign company looking to invest a large amount of money in South Africa in itself is a big positive, I think. I would hope that a lot of South African investors take the opportunity to look at the company now and to see its potential as the development occurs. So from that perspective, I think it's quite a positive. I think from delivery in terms of our funding program for the development itself, I think it's another positive as well, because obviously we're making a far more flexible platform, or creating a more flexible platform for investment in the project itself.
Looking at the investment case of your company and some of the risks that could possibly be incurred with regards to this project, you're still in the process of getting your mining rights. How big a risk is this for investors?
I guess as you go through the development curve of any major project, obviously the regulatory approvals are a major risk, or a major hurdle that you have to overcome to get through the development curve. There are other major risks, particularly transport, infrastructure type risks. They're inherent here in South Africa, as they are in many other countries in the world, particularly Australia. So the risks that we face are not unique to South Africa. I would consider them to be the norm in terms of the development of a project of this size and type. Fortunately, the management of resource generation has had a lot of experience of building projects of this type and nature. So collectively, the senior management has more than 70 odd years experience. So we're familiar with the risks. We understand what it takes to try and challenge those risks and overcome them, and I guess that's the work that we have ahead of us.
And you mentioned transport and infrastructure. Are you talking to Transnet at the moment? Because obviously that's going to be your big sort of major challenge going forward.
Yeah, yes. Clearly the operation itself will be a major coal mine. So it will produce significant volumes of coal, both for the domestic market as well as for the export market. That's our target. It's really a 50-50 mix. So rail and rail infrastructure is a big issue. We've opened a dialogue with Transnet. They're certainly now very aware of our existence. We haven't necessarily, I guess, made our position quite prominent in terms of, I guess, a press or a political agenda, because really what we are coal miners. We're developers of projects, and we've been a successful track record of nearly 30 years of doing that. So instead of trying to do it on a sort of a public type basis, we usually try and do everything on a consultative type approach.
Right, very quickly, why would an investor choose resources generation over an Optimum or an Exxaro, for instance?
Well, I guess it's the future. The Waterberg coalfield holds a significant resource of coal, particularly our tenements. We've defined 6 billion tonnes of resource there. In that, we have two detailed mine plans. Together, they account for about 600 million tonne of saleable reserve. So in that, they're only covering 23% of the area. So a significant amount of reserve yet to be brought to bear. It is a very low overburden ratio deposit, a very thick coal seam. It goes for about 140 metres. Right. The coal seam, it's only about 20 to 30 metres of overburden. So it's a very low cost operation. Right. So from an investment perspective, it should offer enormous economic returns once the mine gets established.